Hi, this is Jack from Alpha Charts with a state of the market video. Today is June 20th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's start off with the SPX as we always do. And so here's the peak back in February. And we've run up. Right now, this is the top of the run. Here's the fib levels. Sorry about that. Levels from the bottom to the top. And so we've now kind of pulled back or consolidated. I do see a potential for a high and then a lower high. And here's a low, and let's see if we get a lower low, right? This green area remains to be this important area. It's pretty wide, and it goes really from the 0.786, and really we could probably say it goes down to the 0.618, right? Fibonacci retracement of this whole move. You can see the volume weighted average price from the peak and from the bottom are about the same spot, and right coincide with this 0.618. And this is the 65-day EMA, which is ascending. All right. Volume bar shows definitely a distribution day to me, but it was triple witching, and it was options expiration, and it was rebalancing, I think. So a lot of stuff was going in the market. So this volume right here is not as bad as it looks. Okay. So because all those things were happening in the markets at the same time, a lot of shares were being traded and moved around. And so this, this is not as bad as it looks, even though it was a down day. This bar does not look pretty at all. I'm not extremely worried about this bar. I think that this green area, I think if we break below 0.618, different story. Now I'm a little bit more concerned. But right now, this looks like just digestion of the big move up. We'll see. You know, most of these different pullbacks are 10% or more. So if we look 10%, you know, we're still within this green area, even to the 12% from the peak is only, to the 0.618. And that would be a normal pullback, right? 12% pullback within an uptrend happens all the time. I mean, let's see what this was. All right, that was 7%. That was a little bit nastier, so we won't go there. Even, 12%, right? And then he had another big run. Then we have here, right? Oh, I'm sorry. Come on. There we go. Okay, that was a 20% pullback. So these pullbacks happens, right? Those were deeper pullbacks. But all the time, 3%. Just looking here, 5%. So right now, though, I don't think this is anything to worry about. We're talking about a total of, right now, 4%. The 0.786 is only 6%, 12%, all within the context of an uptrend. Now, price gets below the 65-day EMA and stays below it, break below 0.618, right? That could change my mind, right? That then things are rolling over, and we would be making lower highs and lower lows in that case, and then that's a downtrend, and we would look for some of these other areas down here to see if they would hold or not. All right, but that's the SPX. Qs, the Qs have been my biggest concern, because again, we're hitting this. We'll go to the weekly chart. I know I've showed this to you a bunch of times, but we're going to show it to you again. This channel is important. This channel has been important. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, now 12 times, right? But look at the weekly. It was a nice, big, fat up week. You know, volume here, not as good as some of these potential distribution weeks, right? Like this one. But still, it was an up week. We're up against the bar. But listen, if we move sideways here, right, it gives us more room. This is an ascending channel. Let's go back to the daily. You know, no one knows what's going to happen here, right? Nobody knows what's going to happen here. But we got close to this upper channel. We pulled back, came back kind of to it, right? This area was the prior high from 2020 February, this earlier this year. And so I think as long as we're above, 230-ish, as long as we're above 230-ish, we're still in an uptrend. 65-day EMA is moving very quickly higher. Here's the average volume weighted average prices from the peak and from the low. I mean, they're all the way down here. So pullbacks make sense within the context of an uptrend. And I think that's what people, forget. I'm not, I don't think we're going to be, going all the way down here, or even I don't think we're going down here. I don't think that's likely. I think that, 14%, 12%, 8%, yeah, that makes kind of sense to me, right? 8 to 12% in this range, that would make sense. Get down to 213, 215, somewhere in there. But nobody knows the future, right? That's just one possibility. This looks really strong. Heck, we may not even break the prior highs. We just come back and retest this high, move sideways through it, and now we have a nice big up channel. We have more room to the upside. We'll see. And the weakest one remains to be IWM. Big run up, pull back. This area right here at 126, 127 area, that probably is going to be important again. It was very important over here in 2018. It was important back over here. So this is the area that I'm looking to hold. Lots of ugly looking stuff going on here. I don't trust this one, but if it holds 126, 127, the series of higher lows would remain. And then you could still make a higher high. So the uptrend would not be dead, right? Hit here, bounce back up and go even higher to maybe to here. Yeah, that's a very good possibility. So just because we come back and retrace some doesn't mean that the uptrend is out, and doesn't mean we're going to roll over and make this perfect double bottom, right? This uptrend could still be viable as long as this 126, 127 holds with higher lows being put in. All right, next up, we're going to look at the Dow Jones. And we are looking at, think about it, we hit this area, and what happened? It rolled right back over. So this has been resistance. This kind of makes sense. We rolled over. Maybe we'll come back and test these. Again, volume weighted average price from the top and from the bottom. And they're all kind of converging together in a lot of ways. And we'll see if this general area will hold or not, right? If we roll over, then this will be the next major area, obviously. You may even say the 7250-ish. But again, right now we are seeing still potential for higher lows. And even if it gets back into this area and holds here and bounces back up, we're still showing higher lows and higher highs, still within the context of an uptrend from the bottom. All right, so let's look at some specific charts like the SMH. I drew this in a week or two ago, and we'll see if it holds true or not. It's just a guess. I do think that some kind of pullback is happening, but look, we are seeing similar things, right? And then actually, this looks so healthy. because we're just consolidating sideways. Now, a lot of people are going to be looking and saying, oh, look, we didn't get overbought. Now we're making, a momentum divergence here. And that may be true, right? But we're staying in a bullish range, and one more push higher and it blows this out of the water. So it's a momentum divergence now. Doesn't mean it's going to be a momentum divergence a week or two from now, right? And look how this has stayed with above 50, right? This is staying above 50. So yes, we didn't get overbought here. I get it. We missed it by just a tad, but I think that this moving sideways or even a small pullback, maybe the 65-day, I'm sure the 50-day is in here somewhere around here too. Pullback and something like this would be extremely bullish. You would have this this price compression, right? Higher highs, higher lows, and a breakout. So that's what I would like to see. That's my bullish scenario for SMH. And I think it's a likely scenario. Again, as long as price stays above, 130. We'll call it 130. I think there's a good chance, it probably doesn't even come down to 130. Now, if we get a complete rollover, different story. Now we're looking at, down to the 100 level again as being super important. But we're not even close to there. We're still knocking on all-time highs in SMH, semiconductors. That's got to bode well. And again, this divergence, if we move sideways, it takes care of that by itself because because those can correct through price or through time. And right now we're working on time. And it could be a combination of both, right? Small pullback, time, boom, 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 taken care of. All right. So next up is the financials. Financials rolled over. Again, the VWAPs are from top and bottom. 65-day, it held it right here. Would love to see, these VWAPs hold. If not, we could touch this area. A break of this area, things get a little more dicey, right? But as of right now, I don't think there's anything to be worried about. Maybe I'm wrong. There's a lot of news out there. There's elections, there's COVID, there's all kinds, there's protests, there's all kinds of things going on in the world right now. But there always is. There's always something going on to be worried about that could tank the stock market. So why worry about those things? We can control this. We can have our levels that we're concerned about, and we move forward. Financials look like crap. Nothing I'm interested in at all right now. They're rolled over, ahead of the market. They just don't look good to me. But as long as they stay above this area, we can at least say that they're not hurting the market. They may be going sideways, but they're not hurting the market. And that's a positive, I think. Let's look at lumber. Lumber is holding up. This was the area that was important in my opinion. And we broke out, we came back, we retested, and now we're moving higher. Hard not to be, hard to be too bearish if you see lumber holding this level. Again, in many instances, it's a leading indicator. It was a leading indicator on the way down, and now it's potentially a leading indicator on the way back up. So again, any pullback would be, at this point, I think is a viable pullback. Came down 10, there's 11%, right? That's what we say. We said 10 to 12% pullback within an uptrend. That's what I'm talking about. Value line geometric index, look at that, ran up. This was the area that was important. Again, these green lines are approximations, no one knows. Came up, hit the area of resistance up here. It's pulling back some. This shows the health of the market and the breadth of the market. We are, we're in an uptrend, right? We got higher lows and higher highs. As long as this holds, we're good. Again, the green line is the line in the sand, I think. If we go to a line chart, you can see this a little bit better. This goes back to 2009. And yeah, this is looking so far a buyable dip. Again, we roll over, everything changes. We'll see. Next up is the put-call ratio. I like looking at the put-call ratio. I added some terms in here. In this area, we believe the market is never going up again. In this area, the market is never going down again. Okay, this shows the extreme in the sentiment. And let's just you see we got extreme back in the beginning of June. It pulled in. It didn't make a lower high in there. So, okay, that's fine. I have no problem. Actually, I kind of want the market to have a sharp 10 to 12% to get back up here or even exceed this. That would be the most bullish thing I could think of. And when I say 10, 12%, that's in the general market, because in the stocks that I go, which are growth names, right? I'm in the growth. I'm a growth investor. In the stocks that I invest in, those should, if they are true market leaders, should hold up better than the regular market, right? If I see them turning over faster than the regular market, that's a sign. That's information. But yeah, I would love to see this, some real sharp move to the downside, maybe even take out this 1.5 level, right? It doesn't have to get all the way down to 2, but take out 1.5. That would be a very, very bullish scenario, most likely. Next up is, let's look at bond credit spreads. So here we go. Credit spreads. You saw the peak over here in March, and we're making lower highs and lower lows. That so far is continuing, right? So far, get rid of volume. We are still making lower highs and lower lows. Nothing to see here. We make a higher high, and we get especially above this 1.7 level, 1.71, 1.72. That would be a big problem, right? But as for now, I don't think credit market is flashing any warning signs yet. That could change next week. Don't know. But right now, I see a tightening of the market. The trend is going down, and we would like to see, obviously take out this low right here. We'll see what happens. Nothing that concerns me right there. Let's look at copper versus gold ratio. And we had this breakdown, right? And just going back, look at the weekly. Here's the weekly chart. This was a 2009 low. There's a big deal right here, right? We undercut it, came back up, hit the 2016 low, right? And now we're pulling back a little bit. So right now, this is a false breakdown in my book. Right now, this is a false breakdown. And yeah, as long as this area holds, right, this 2000, we make a higher high here, I have no problem with this. This looks like a bottom, right? And we should start to break out. And I think that is very constructive for the economy overall, this type of movement right here. We'll see if that holds. So, I still think that we have potentially some room to move to the downside. And I think that summing everything up here, but I think as long as these levels hold, I think the correction being 10 to 12% would be a healthy correction within the context of an uptrend. Now, and again, we have to know our levels, right? I think that if this 2836, or even 2870-ish, if those break in this area, 2870, 2836, those areas break, I think that we have bigger issues, right? I think, and again, we go through everything, every single chart, Qs, we know our levels. I think if this area breaks, that's a bigger issue. That'd be a false breakout. So I think, though, the levels are clear. I think that we need to just realize that we had a very strong increase, and we, the Fed's behind this market, whatever that means, they're pumping liquidity, and that's what that means, right? They're buying bonds, they're buying specific bonds now for specific equities. So they're doing everything they can to keep this market in an uptrend. And so I think that is, that can't be discounted. I think that the market is showing that they like that. I want to just end with the COVID map, actually. So this is the COVID map, and I know but I wanted to show you this piece right here. So this is from Johns Hopkins University, and this is the cases, right? So this is confirmed cases, and you see this big upswing, right, from March. Now, this is standard. Now, when we switch to logarithmic, I want to show you how this looks now. So big spike up, boom, boom. Now, this incline is not the same as this. This is a scary chart. So when you see an incline like this is what people will show you to try to scare you. Now, cases are still going up. Not saying that they're not. The cases are still going up. We're almost at 10 million range. But the rate of increase is much different, right? The rate of increase is much different than we were in March, right? March, the rate of increase was very high, right? Now it's starting to, is it going up? Absolutely. And again, this is not really about COVID as much as why we use logarithmic charts versus standard charts, because it will tell a completely different story. All right. That's what I got for you this week. Good luck out there. If you like this content, please like and subscribe to my channel. What else do I have to say? Oh yeah, also I'm doing that 12-week experiment, which is going really good so far. I'm really excited for this. Week 3 is in the books. I'll be doing a video of that tomorrow, so make sure you check that out, because I put the numbers in already and it's showing some really good statistics right now of what's going on. And I don't think you're going to want to miss that. Actually, I'm already starting to change the way I trade based on some of this early information back. So check it out. I will do that video tomorrow sometime. Again, good luck this week trading, everybody, and take care and stay safe out there.